In today's video, I'm going to walk you through my 5-step day trading techniques for beginners. Keep watching. Hey traders, I'm Andrew Oko. Welcome to another video. If this is your first time here and you want to learn how to find the best performing stocks to trade every day, make sure to smash the subscribe button and the bell notification icon so you don't miss out on my future actionable stock trading videos. Okay, let's start with step number 1. Find the best performing stocks of the trading day. The first step of an effective day trading activity is to find the best performing stocks of the trading day. So you have to hunt for the best stocks to trade with lots of volume and volatility. In case you don't already know, trading the best performing stocks of the day can dramatically reduce your risk of losing money as a stock trader. Why? Remember, there are thousands of stocks available to trade on every trading day, but only a few can spike in price action. The question is, how do you find the best performing stocks to trade? Here's one simple technique that works great. Use the free finviz.com stock scanner. All you need to do is head over to finviz.com and click on the scanner link. Next, click on the Alt tab to expand the filter option. Now, before you can find the best performing stocks of the trading day, you have to look for the top gaining and the highest relative volume stocks of the day. These stocks will be the biggest performance of the day because they have some sort of breaking news that causes traders to be willing to pay more for the stock than it was previously priced. Now, click on the signal bar and select top gainers. Next, click on the relative volume bar and select over 5. Next, click on the float bar and select under 50 million. And finally, click on the change from open bar and select up 5%. Note, you have to perform the scan on the finviz.com website after the stock market is open at around 10:50 a.m. Eastern if you are currently using the free version of the finviz.com website. Okay, now look at the stock ticker symbols the screener have generated below, and just like that, you get a list of the best performing stocks to trade right away. You can also refresh your browser to get an updated list of the best performing stocks of the day as many times as possible. For example, the first stock on the list is GWGH, and it's currently trading at over 5 million shares on a day. Hope this info was short and nice. Next, it's time for step number 2, which is to perform proper day trading technical analysis of the stocks you found. So now that you found the best performing stocks to trade, it's time to perform proper day trading technical analysis of the stocks you found. So you have to look at the entire candlestick price chart data to see how these stocks have performed in terms of average daily traded volume and price volatility over the course of the time it's been trading on the exchange. And the 4-hour candlestick price chart is best suitable for day trading technical analysis, because if you plan your trade entries, stop loss, and take profit prices on a 1-minute or 5-minute candlestick price charts, the odds of hitting your profit loss ratio for the trade will be very slim, and that means you're more likely to lose than you might win in a very follow the market price action. Okay, you may have already heard that 90% plus traders lose money in the stock market. Why? Because every trader around the world is using the exact same 1-minute or 5-minute candlestick price charts to plan day trade entries and exit price levels. So how should you plan your trades going forward? I would say stop using the shorter time frame candlestick price charts like the 1-minute or 5-minute candlestick price charts to perform your day trading technical analysis, and switch over to the 4-hour candlestick price charts. Why? The 4-hour candlestick price charts can literally show you the entire price action activity at a glance. So for you to complete the proper day trading technical analysis of the stocks you found, you have to measure the percentage bounce of all the historical bullish trends of price action and the percentage dips of all the historical bearish trends of price action on the 4-hour candlestick price charts. Next, assume that the most current price trend will gain the same momentum to bounce or dip like it did historically. And finally, plan out your trade entries and exit price levels. With that, let's move on to step number 3, which is to define your profit loss ratio for every trade. Okay, in step 1, we found the best performing stocks to trade. And in step 2, we performed proper day trading technical analysis of the stocks we found. And now it's time to define the profit-loss ratio required to trade the stocks you found. But you might be wondering and asking, what is profit-loss ratios? Well, profit-loss ratios, it's a measure of how much money you might make as profit if the current price action of the stock continues to rise above your entry price against how much money you might lose if the current price action of the stock continues to dump below your entry price. Loss ratios are basically neglected by most traders, and that's one of the reasons they fail to succeed in the markets. When you trade with a 2-to-1 profit-loss ratio, you can be profitable with even a 50% success rate. For example, let's calculate the profit-loss ratio required to trade the stock ticker symbol on the list in step number 1. First, you have to define the distance between your entry and stop loss prices. My personal preference is to allow a 10% distance between entry and stop loss prices. Now, let's do the loss calculation. For example, let's say the total stock shares bought was 1,000 shares. Entry price was $2.69. Total amount spent will be 1,000 shares, which is $2,690. Stop loss price was $2.44. Now, the loss per share will be entry price minus your stop loss price, which is $2.69 minus $2.44, which is equal to 25 cents. Total loss would be 25 cents multiplied by 1,000 shares, which is equals to $250. So based on a 2-to-1 profit-loss ratio, if the current price action of the stock continues to dump below the $2.69 entry price and suddenly touches the stop loss price on this trade, you lose $250. Next up, let's do the profit calculation. When it comes to calculating the profit target, the distance between the profit price and the entry price is 20%. Total stock shares to be sold or 1,000 shares. Profit price $3.29. Entry price $2.69. Profit per share equals to profit price minus the entry price, which is $3.23 minus $2.69, which is 54 cents. Total profit would be 54 cents multiplied by 1,000 shares. That gives you $540. As you can see on the calculations done here, the profit price, it's twice of the loss. Hence, a profit loss ratio of 2-to-1 have been defined. With that, let's move on to step number 4, which is to plan out your trade entries, stop loss, and take profit prices on the 4-hour candlestick price chart of the stock you found. Look, trader, I must be honest with you. If your day trading process is not structured in a way that's more likely to generate profits, you're not going to make any money in the markets. And that's why it's very important to identify the best entry price to buy any stock on the candlestick price chart. So you have to choose to trade short or long based on the trending directions of the current price action of the stock you want to trade. As you may already know, the current price action of any stock can only zigzag uptrend or zigzag downtrend. That means the current price action of any stock can only move in one of 2 different directions at any given time. So you have to master the art of identifying bullish and bearish trends on the candlestick price chart. And next up, if you want to trade short, make sure to sell and buy back the stock on the red candlestick downtrending price action. But if you want to trade long, make sure to buy and sell the stock on the green candlestick uptrending price action. The question is, how do you find the best entry price to buy any stock on the candlestick price chart? Here are 2 simple techniques that works great for the long bias trader. Identify the red candlestick bullish trend interrupters and the green candlestick bullish trend starter on the candlestick price chart. First, all you need to do is look for the red candlestick bullish trend interrupters that are formed in front of the previous green candlestick bullish trend. Then eye out to see if it continues to dump lower and lower till it completely loses its dumping momentum. Secondly, watch out for the new green candlestick bullish trend starter that proves the current price action of the stock have suddenly formed a new trend in price action. Finally, starting from the green candlestick bullish trend starter, use the horizontal line tool to mark out your trade entry, stop loss, and take profit prices on the 4-hour candlestick price chart of the stock before you even take the trade. With that, let's move on to step number 5. What percentage of your account will be used to trade the stocks you found? Now it's time to decide on what percentage of your account will be used to trade the stocks you found. And here's how to use the candlestick price chart data of the stock to decide on how much money to spend on that particular trade. Now, before you decide on what percentage of your account buying power will be used to trade any volatile stock, penny stock, make sure you've measured the percentage gap between the all-time low price of the stock and your entry price. To measure the percentage gap between the all-time low price of any stock ticker symbol and your entry price, first, open the candlestick price chart data of the stock via the tradingview.com chart page and switch the time frame indicator to the 1 month or 1 week time frame to enable you to see the entire candlestick price chart data of the stock under review. Next, identify the all-time low price of the stock and use the horizontal line tool to indicate the all-time low price of the stock. Finally, measure the percentage gap between the all-time low price of the stock and your entry price with the price range tool. Now, if the percentage gap between the all-time low price of the stock and your entry price is 90% and below, you can confidently trade with 50% of your account buying power. Please do not forget to cut losses quickly. But if the percentage gap between the all-time low price of the stock and your entry price is way more than 100%, I would say trade scared with a 10% of your account buying power. Why? Because when the percentage gap between the all-time low price of the stock and your entry price is way more than 100%, current price action of the stock, it's more likely to dump pretty hard than you might expect. Note, this step is mostly applicable to when trading the highly volatile penny stock and might not be applicable when trading the large cap stocks. Okay, now that you've seen how to determine how much money to use for any particular trade, it's time to click that buy button. Now, before I close out this video, I have a quick bonus tip for you, which is to exercise strong mental discipline and patience when executing your day trading orders. Finally, instead of searching for the best trading strategy that can produce 100% win rate on every trade you take, simply accept losses as part of the online trading business. Look, every trader will experience losses. I cannot completely avoid it. You cannot completely avoid it, and we cannot completely avoid it. In fact, a good trader is a good loser, and the trick of being a good trader is to always cut your losses at a certain amount of dollars. That means understanding a logical price to sell any stock, any stock, for a loss if the current price action of the stock continues to dump below your entry price. So you have to control your losing trades to minimize losses and allow your winning trades to maximize profits. For example, if I take a trade and all of a sudden the current price action of the stock continues to dump below my entry price, I'll take the loss and move on. So that's it on my 5-step day trading techniques for beginners. And if you learned some cool stuff from this video, make sure to subscribe to my YouTube channel right now. Just click on the subscribe button below this video right now. Now I want to turn it over to you. Which one of the steps from this video are you going to try first? Are you going to try how to find the best performing stocks to trade every day? Let me know by leaving a comment below right now. Thank you so much for watching. I'll see you next time.